All right, everyone, thanks for your patience. I'm going to go ahead and get started. Again, just want to thank everyone for being on here today. My name is Charlie Castro. Many of you have been on these webinars for the last almost 4 years now. I recognize a lot of the names that are on today. See a lot of new folks, too. We're going to be talking about some different things today. As many of you know, the last couple of months especially, we spent time talking about, just sort of industry statistics, what's going on in the industry. We'll talk a little bit about that today. But there has been a bit of a paradigm shift in this market. And so for the last couple of weeks, we've been talking about, what we see as a significant change in the market, and the change applies directly to how you as an individual investor can now buy foreclosed, cash-flowing, turnkey real estate. So that's going to be our focus today. That's what we're going to be talking about. Now, we're going to take questions at the end of the webinar. So if you have questions, you can type them in any time into the chat box to the right of your screen. You've got a dashboard there. If you just click on that, it'll open up. Down below towards the bottom, you'll see a little button that says questions. If you click on that, you can ask your questions. I never open up the microphones unless we have less than 10 people on the call. We're not going to do that today, but we will take questions at the end. And of course, I'll leave my information up on the screen for a little bit too. So if you want to call and talk to me, you can do that as well. So what I want to kind of do today is just sort of paint a picture of where we've been at, sort of what's occurred since the real estate bubble burst back in 2008. And where we see it going down the road into 2014 and beyond. Many of you know I've done a lot of webinars with specialized REO groups, and if you don't know what a specialized REO group is, these are companies that were sort of founded when the market crashed. They were companies, individuals who would open up a particular market. They would then identify real estate that they could buy from either from banks or from private parties off market. But in the beginning, in the early days, it was primarily from the banks. Selling foreclosed properties as massive amounts of foreclosures came in the market. And then those groups would take those homes, they would do some rehab work to them. They'd find a tenant for them. They'd sell it as an investment. And their value add really was that they did all the work. They provided, sort of the skill set that many of you as an individual investor may not claim, which is, the ability to find the property, the ability to be able to get the whole property rehabbed and then rent it out, and the ongoing maintenance of the property. And so the value add was that the specialized REO group added some skills to the party that a lot of people didn't possess, including Warren Buffett. Many of you heard me say this, but Warren Buffett was interviewed back in 2011, late 2011, and they asked him, "Is this a good market? Is buying real estate a good investment?" He went on to say that, "Yeah, I'd buy millions of single-family homes if it were practical, but that I'm not very handy." And many of you may have seen that quote. It's quite a famous quote now. If you Google Warren Buffett on MSNBC, the interview, you'll see him talking at some length about the value in buying real estate. But what he was saying was that you got to have people to help you do it. The specialized REO group brought that to the table. They brought the ability to do these things. You could participate in investment real estate, but these specialized groups did the work for you. The buzzword became turnkey. The ability to buy it completely finished, rehab, renting, and cash flowing. That was sort of the buzzword that everybody used. It's turnkey investment real estate. And it was all very good. It provided a great service. But then some things changed. That's what we're going to sort of talk about today. I've done webinars the last 4 years with a whole lot of these different specialized REO groups. Summit Assets Group up in San Francisco, of course, REO Reseller. I've been doing stuff with them since 2009. Virtuoso Capital, Ray Russo, would talk about buying real estate from the perspective of a financial planner. Actually going to have another one with Ray coming up here in about 2 weeks. You might be on the lookout for that one because Ray provides a lot of really good free advice essentially about what it can mean for you, an individual investor, from a but from a financial planning perspective. AccuPlan, we did 4 of those webinars with AccuPlan a couple of weeks ago. I'm talking about using your self-directed IRA, your 401k. I've been a guest twice on Real Estate 360. It's carried by the Wall Street Journal Radio Network up in San Francisco. And what's my role in all? Well, I'm essentially what's called now, fancy name, acquisition specialist. That just basically means that I help, whether it be the small individual and or the larger institutional or hedge fund buyer, identify real estate. I work with all those groups, so I have some knowledge and experience there with working with not only the guy looking to buy one house, trying to find the best deal for him for one piece of investment real estate, or the guy that manages a hedge fund and needs to spend $10 million every week buying real estate. So that's kind of what my role in all that is. And I get asked all the time, whether it's whether it was last year or the year before that or the year, I've been asked consistently, is this the right time to buy? Did I miss the boat? Boy, the market's rebounding. Is it a good time to buy? Did I miss the boat? You know, I'll tell you, I think that this is probably the best year to buy. I think 2014 is going to be the best year for a lot of different reasons for different groups. Now, that doesn't mean strategies haven't changed and whatnot, but in terms of buying turnkey real estate or investment real estate, I think 2014 is going to be the best year, and I'll talk about that in just a few slides. But what I want to profile here just for the next few slides is what are the bigger investors doing? What are the larger investors doing in this market, and why do they continue to buy? The market's going well. It's rebounding. Again, I spent the last 2 months really just talking about statistics, what's going on in the market, what's going on in the market, where we think the market may be going to. We saw a solid 12% jump across the country in housing prices in 2013. We expect to see something similar to that in 2014. So let's sort of review just for a few slides so where the market is now and what do we know? What do we know about the market right now today? Well, the first thing that we know is the hedge funds continue to buy. The larger institutional investor continues to buy real estate at record paces. Last year, to give you an idea, they invested $9 billion in single-family residences buying foreclosed properties in 2013. A couple of them I got up on the board here, just Blackstone. If you don't know who they are, they're the largest owner of single-family property in the United States. They own 31,000 homes in 13 markets. John Paulson was the guy that accurately predicted the mortgage meltdown was going to occur back in 2007, bet heavily against housing, then obviously invested hundreds of millions of dollars of his own money to buy real estate. Talked about Warren Buffett. You know, I could literally do a webinar. Seriously, I could do a 30-minute, 45-minute webinar on just Warren Buffett and why Warren Buffett thinks buying real estate is a good idea. I'm no joke. There's so much about him. If you don't know, he bought in October of 2012, he bought Prudential Real Estate. If you remember a moment ago, I said, you know, Warren Buffett made this comment about buying millions of single-family homes. Well, because he wasn't very handy, he recognized that I need people on the street. He recognized housing was the best place to invest his money. He saw that, but then he realized that if I'm going to do it, I got to have infrastructure. I got to have people that manages it, can find the properties available. So he bought Prudential Real Estate. It now is called Berkshire Hathaway Home Services. I think they'll still fly under the flag of Prudential Real Estate just because that makes a lot of sense. There's name recognition there. But that's owned by Warren Buffett. Prudential is now owned by Warren Buffett. And so he's made a lot of comments about the housing market, where he believes it's going. And obviously, depending upon who you listen to, you know, some folks will say the market will be back to where it was as early as 2017. Or as late as 2021. So that's, you read that in, and I don't know where it is myself. I mean, it depends on which magic ball you want to rub, but somewhere between 14 and 21, or excuse me, 17 and 21 is where most people predict that the market will come back to where it was at. And so when these guys buy, these hedge fund buyers buy, they're looking in markets that have appreciation and that are still well below the previous peak. The final group, there's a group called Property Direct. They're my biggest client, actually. I sell them homes daily. In a number of different markets. I think I'm in about 5 markets with them. They are the largest buyer that I work with personally. I do work with Blackstone. I will say, candidly, Blackstone's very difficult to deal with. They have different buying criteria in every market, and they're just because they're so corporate, they're not as easy to deal with as a Property Direct. Property Direct buys a lot of properties, but they're a little bit smaller. I have one single point of contact that I interface with. And it's just a little bit cleaner. But remember that Property Direct is a group that buys Property Direct, and I'm going to talk more about that later. And that's why I put them up on the screen today to sort of highlight what their methodology is to it, which is buying direct. Most of these funds, you know, you talk to all these different hedge fund guys, and they'll all give you a little different variation of the same story as to why they're buying real estate the way they are. But they do believe unilaterally that it's the best investment in America today for a lot of reasons. It's a commodity. It provides cash flow. There's all these reasons, but they believe this is the best place to put your money. And there's you know, we did a webinar 2 weeks ago with Accuplan San Francisco, a guy named Lamar Baxter, and he talked a lot about the volatility of the stock market, something that I'm not an expert on, but just basically saying, you know, when you look at where you want to put your money at in the years ahead, you know, do you want to be in the market where it's been and where, I mean, the market's rebounded in an amazing way. But there's going to be some volatility. I mean, it was George Soros just a couple weeks ago that bet $1 billion against the stock market. That's a pretty powerful statement. So Blackstone, they're the largest opportunistic fund ever raised, $13.3 billion. They've invested $9 billion of that already. They're now getting investment dollars from the Chinese. They took in over $1 billion from the Chinese investors just last year. As I mentioned, 31,000 homes in 13 markets. And then I already mentioned Warren Buffett, and probably the most the most bullish indicator for the housing market's Warren Buffett. And he's said this many times, and again, I said I could do a webinar on just Warren Buffett. If you Google him, one of the things you'll see him say over and over and over and over again is, the market's recovered, but it's far from where it was once at. We're far from the previous peak. So we've seen a recovery, but there's still a lot of room to grow. And historically, the numbers tell us that real estate cycles, and that it will eventually get back to where it once was. So what these guys do when they analyze a market, they analyze that market based upon a number of factors, but one thing that they look at is where's the market at now and where was it in 2008, because that's where it's going back to. It may even take a little dip here or there, but eventually that's what it's going to crawl back to, and that's what they look at. And then John Paulson, again, I mentioned him. He was just recently quoted as saying, no, it's not too late to get involved. I still think buying a home is the best investment you can make, and affordability is still at an all-time high, and you're going to see just how affordable it can be here just in a few slides, and that's what we're going to focus on today. I mentioned, why are hedge funds buying, and I'll just do this real briefly, because these reasons are sort of obvious, but yet these are the same reasons that apply to why you may consider buying investment real estate yourself. Inventory is at an all-time low. That's just a fact. Markets are all going up, so you're buying low, you're selling high. That's the fundamental investing, no matter what you're buying in, right? You buy low, you sell high. You can get great deals, you buy below market value, and the markets are climbing up. In addition to that, you get high ROIs. Wherever you may have your money at, if you're not getting 12 to 15%, you might look at housing, because you can get that in housing. There's tax benefits. Now, I'm not a tax professional. I can't advise you on that, but I would tell you that you should talk to your tax advisor about the benefits of owning secondary real estate. Now, we're going to do a webinar. I know I've been threatening to do this for about a month now, but I've got a gentleman who is a tax professional who wants to do a webinar with us about the top 10 tax benefits to owning real estate, so be on the lookout for that. As soon as I can solidify a date that we can both agree to, we'll be doing that in the coming weeks. Number 5, increasing rents. Everything you read about housing right now, one thing is consistent clearly, regardless of the market, and that is rents are going to keep going up. And that just means if you buy in today and you're getting $800 a month in rent, it just means in a couple of years from now that rent will probably be $850 or $900. Your ROI just continues to get stronger and stronger. The hedge funds will tell you housing is the stablest place to have your money. They'll tell you that if you're in the market, if you're in a paper stock, it may have been good, it may have been great, and it may continue to be, but it might not be, because housing is one market where you're not going to wake up one morning and say, I just got wiped out by an event in the market or event in the world market. Housing is stable. It fluctuates a little bit, but a little bit you're talking about, we saw, for example, a 3 to 5% slide in housing prices in fourth quarter of 2013, but we saw that primarily because the government had a little hiccup there in November where they shut themselves down, and it concerned some people. So you had a little hiccup in the economy, people got concerned, but it climbed right back up, and in those same markets that saw a dip for those few months, the market went right back up again. Creative exits, absolutely. There's lots of ways to get out of the market now with as many buyers as there are in it. And then real estate's a commodity. It's a hard asset. It's like buying gold. It's not buying a paper stock, and that's what these hedge fund guys look at. So what is their strategy? Now I want to explain this. It's important because it applies to you too. When you buy, you need to have a strategy. So what's the hedge fund strategy? What are these guys, the guys that get paid millions of dollars to identify a good investment, vet it out, and acquire it, and execute on that business model? What do these guys look at? Okay, so there's two different types of strategy. The first one is their buying strategy. What do they buy? Now this is what happens. Every time I have a hedge fund buyer that changes their criteria, you get an email, typically from the manager, that says this is our new buying criteria, and it'll say things like, we want these 6 markets. We want Atlanta, we want Las Vegas, we want Birmingham, we want Charlotte, North Carolina, Memphis, Tennessee. So they'll give you their cities they want to buy. Then they'll tell you we want at least 3 ones. It's got to be at least built 1950 or newer. It's got to have at least a carport. It's got to have a cap rate of at least 12%. So they give you their buying criteria. Now what that tells you is that some very smart guy that manages a hedge fund of millions or billions of dollars has taken their time to sit in a room and say, this is what I'm looking to get. We suggest that you do the same exact thing. We'll talk about that a little bit later. Their second strategy is, what do they do with it after they buy it? So they buy it, it acts, they bought in their market, they got the cap rates they're looking for, they're in a market that's appreciating, they got what they got. Now what do they do next? Everybody, every group that I deal with the exception of one small one, but all the hedge fund guys are a hold model. They're a buy and hold model. Jonathan Gray is being quoted here. Jonathan Gray is the CEO of Blackstone. As I mentioned, Blackstone is the largest owner of single-family homes in America. He was a billionaire last year. He became a billionaire with a B last year. He took out $220 million in bonuses, according to the SEC filings. He made a lot of money buying real estate. Now, his quote is here, they believe the market will remain bullish for 2 to 4 more years. We agree with that. We also believe that's market dependent. We believe that some markets are already cooked. We believe other markets have more than 4 years. We believe some markets got 2 to 3 year runs. Some markets have 18 months runs. So we believe it's market dependent where you buy, where we believe you can still buy at great values for the next 2 to 4 more years. We do believe that to be true. But then he goes on to say their strategy is to isolate key markets for growth. In other words, when he says for growth, that means the market's going up, appreciation's going up. So when he says isolate key markets for growth, he's saying looking for appreciation, looking for markets that have rebounded, the economy's getting better, housing market's improving, but it's well below the previous peak. That's what he means by growth. They renovate the properties. When they say 10% of the purchase price, that just means they're not buying properties. They have to go in and gut them. They're not going in there and putting in new roofs and new foundations and tearing out walls. That's the 10. If they buy it for 50, it's 5,000 in rehab. 5,000 in rehab. What does that equate to? Carpet, paints, flooring, cabinetry, knobs, maybe some electrical work, minor stuff under $5,000. But then he goes on to say the houses have a 94% occupancy rate, which says housing market is strong, rental market is strong. 94% are rented. And they're trying to build a long-term business, so they're not in it for the short term. They're not in it to flip. Now, that's not to say you can't get a good flip. I do some flips. I got a couple groups I work with that do flips. There's nothing wrong with a good flip. But all I'm pointing out here is that the bigger hedge fund guys that are doing this, that have analyzed these markets better than anybody else in America today, those guys all have the same model, and that's to keep it and hold it and take that appreciation. Okay, so what do we know? Now, let's just go through some statistics, and these are about as new as they can get. Millionaires buy real estate. About 77% of investors with at least $1 million in assets own real estate. So that gives you some sort of an idea. Direct ownership of residential and commercial properties was the #1 alternative investment pick for 2014, with millionaires surveyed saying that they plan to buy this year. So what we're seeing here is, again, this is from Bloomberg, February 6th. What we're just seeing here basically is just that people with money, people with a portfolio of over $1 million, invest a percentage of that portfolio into real estate. It's the #1 alternative investment pick for 2014. So while you may say, well, the market's climbed back, the market has rebounded, I got in too late, I should have bought in last year, not next year, I don't know if that's true. Now, again, going to Bloomberg, again, February 6th, wealthy investors are turning to rebounding real estate market as fixed income yields remain historically low and equities surge. What they're basically saying is again, you can buy in low and the equities, the market's going up. So they realize that you can still get in at a great price, get great ROIs as the market continues to climb back. And this is really interesting. This is from credit.com. This is in September of 2013, so just about 6 months ago. 44% of all sales, or a 33% increase in the same time in 2012, were paid for by cash. They were bought by cash. 44% of all sales in 2013 were cash transactions. Now, what does that mean? It means people that are buying real estate are investors, whether it be a small investor or whether it be a hedge fund guy. The people that are buying these homes are buying them with cash because they're not buying them to live in them as much as they're buying them to hold them, watch the market rebound, and create wealth. Again, we're to Business Wire for 2013. Prudential Real Estate, as I mentioned, that's Warren Buffett's group, saying more people are going to buy in 2014. They're saying the Outlook survey indicates that consumers' perception of residential real estate is increasingly favorable, and that consumers are more committed to buying and selling homes in 2014 than they were last year. And this speaks to those people. And there's a few of you I see some names on the line here that I recognize that have been on these webinars for a while that have called up and said, Charlie, should I have gotten in, Birmingham, for example, went up 13% last year. Did I miss that? No, I don't think so. I don't think you missed that boat at all. I think this is still an amazing market to buy in. And it's interesting about Birmingham. We'll talk about that in a little while. That's one of our markets that we're in. But we've been talking about Birmingham for a while, and this year we've got more hedge fund guys buying there now than we had last year. We just had one move in. I don't mind telling you, it's called Havenbrook. Havenbrook Homes. They just moved in there. They moved out of Atlanta, and they moved into Birmingham, and there's reasons why they did that. We can talk about that a little bit later. So the question then becomes is, okay, that's all fine and good. Big guys are buying real estate. I get it. So how do I compete and all that? And that's a great question because this is where I've seen the market starting to shift. Now, I will tell you that what I'm about to go over was not something that came to me in a dream last week or something that I've been thinking about for the last month. This is something that's been really going on for the better part of about 6 or 8, 9 months now, and this is just buying direct, and I'll explain that in a little bit of depth, but I want to go through how the individual guy can compete in this same market. So I'm going to give you sort of what I believe that the individual effort, the individual investor strategy should be, and then we can talk about some opportunities and what's available out there in a few slides. But number one, you got to buy below market value. We talked about that. I said property direct. That's their model. If they're not buying direct from the guy and the wholesaler, they won't buy it from you. Will they pay me a small fee for referring them to somebody? Yeah, they do that, but they're not going to buy from a specialized REO group. They won't do it anymore. They realize that to get the best deals, to get the best ROI, to get the best long-term appreciation and cash out of the deal, you got to get it yourself. And the key to that is to buy below market value. And I'll give you some examples in a few slides what I mean by that, but basically, you got to buy below what the house is worth. That's the number one thing you got to do. If you do that going in, you got fairly clear sailing the rest of the way. Now, that doesn't mean you're not going to have a few bumps in the road. Owning secondary real estate is always going to have, the window got broke, the toilet overflowed. I mean, those are things your property management teams handle for you. But in terms of buying the property right, it all comes down to what you do at an acquisition point. The acquisition point is critical. The second thing, you buy direct from the selling party. And I'm going to give you some examples of that in a little bit, but that is going to be key, I do believe. I do believe that those specialized REO groups are going to have challenges because lots of folks are doing what I'm going to describe to you here on this webinar. Do not buy anything that's not off market. If you're buying on the MLS, you're not going to get the best deal. It's just a fact. Anybody tells you you're going to get your best deals off the MLS are crazy, because that's just not true. They got to be off market. You want to look for both, and it's funny, I saw an investor friend, not an investor, but a specialized REO group, actually, a friend of mine. He's a friend of mine on Facebook, and he posted on Facebook this morning an article about the reasons to buy real estate. Number one was your cash flow. Now, I agree with that, but I also agree that you want to have a combination of not just cash flow, which is ROI, cap rate, rate of return on your investment. What do I get on my money this year from that, this year versus what I invested into it? But you also want to get appreciation. You want to be in a market that you know is going up. It just makes more sense to be in a market that's going up. It's just that simple. Appreciation and ROI, a combination thereof, is your best place to be. I would spend a lot of time in the Atlanta market. I've still got great contacts in the Atlanta market. If you're looking for Atlanta inventory, I have plenty of Atlanta inventory. But it's kind of cool. This morning I saw an advertisement. It was the property of the week, and it was an $88,000 house renting for $800 a month, had a cap rate of 6%. There's nothing wrong with that. 6% on your money in a good market that's appreciating is really good. But in other markets, you can get double that in terms of rate of return and the same or more appreciation. So you want to look for both. Your infrastructure is critical, and we'll talk about property management. But one of the things that's fundamentally changed is that the property management teams that are out there have recognized that there's this huge burgeoning market of people that want to capitalize in the housing market, just like Warren Buffett or John Paulson or Blackstone. But the individuals want to capitalize in this market too. They need direct access to those property management teams. Now, we've done that. We've been able to put together enough property management teams, quality teams in certain markets to where if we can find a good inventory there and good property management there, you've essentially cut out the guy in the middle. We'll talk more about that. But your infrastructure is really critically important. And then finally, you want to understand your long and short-term strategy. We're going to talk about that in a few slides here, but it's important that you understand what you're trying to accomplish before you go into it. I get people all the time that call up and say, I want to buy investment real estate. And the first thing I say is, what do you want to accomplish? Do you want to be in for a year? Do you want to be in for 2 years? Do you want to be in for 5 years? Do you want to flip it? Do you want to do a 90 or 120-day or 6-month flip? It's important to understand your own strategy. Those hedge fund guys don't come up with their strategies out of thin air. They think that stuff through. It's not complicated, but you need to understand what you're trying to accomplish before you do anything. Okay, so I found this to be really interesting. Ken Corsini is a guy. I use his blogs all the time. He writes real estate blogs all the time, and I've used his stuff many, many times on my PowerPoints over the last 4 years. And I found this one to be really cool and interesting because it wasn't what he said in the body of the blog, because I agree with the body of the blog. But what was interesting was the date. Look at the date. It's 2011. Now, what's interesting about that is that was a great strategy in 2011. The problem was nobody knew how to find a wholesaler. Now, let me explain what a wholesaler is. It's very important. If you buy from a specialized REO group, that group, again, bought the property from a wholesaler, fixed it up, put a tenant in it, and then sold it. Put it up for sale and sold it at a markup with a margin. Naturally, they're in business for profit. They got the property from a wholesaler. Now, who's a wholesaler? What is a wholesaler? I'm going to describe him to you. He's a guy that's in a market. Typically, he's been in that market for a long time. He's been through all the cycles. He's either a realtor or a broker or in the construction business, or all three in some cases, or a property manager. That's another one. A wholesaler would be a property manager. They know the market. They've been there forever. Oh, I know that house. That house is for sale. I'm going to go take a look at that. Gee, that house sold for $80,000 5 years ago, and I can buy it now for $30. The wholesaler is the guy that's on the ground. He's the guy that's direct to the property that becomes available. He knows the guys in the real estate business. He knows the guys in the banking industry. He knows the guys in the construction world. He knows people in town. That's the wholesaler. The wholesaler is the guy that everybody buys from. Everybody that is looking at investment real estate through a specialized REO group, I can guarantee it, that group is getting it from somebody else. The wholesaler is the guy that finds the property direct. So 3 years ago in 2011, that was a great strategy. Hey, thanks, Ken. Good idea. Let's get a wholesaler. The problem is nobody knew how to find a wholesaler. Additionally, the wholesaler didn't know how to find you. And so he was selling to these groups that went out there saying, hey, I'm starting a company. I'm going to buy some homes in your neighborhood. I need 5 a week. Okay, no problem. I'll get you 5 a week. And then I'll help you fix them up, and then we can sell them. That's how it works. So now what you do basically is, and this is where I believe the market's going, for you, the individual investor, to take advantage of the market, to be able to do exactly what these hedge fund guys do, the secret sauce is, for I believe, from here on out, is to be able to buy directly from those wholesalers that have those properties available. And they come available every day. Every day you get something saying 3-bedroom, 2-bath in this market. It'll rent for this. It's worth that. It's a great deal. Boom, direct to the wholesaler. So what you're seeing here in terms of a market shift is just simply the fact that people have started to realize that they can go directly to these wholesalers on the ground and source these properties themselves. Specialized REO groups are being challenged by the ever more prevalent wholesalers that find those markets or find those properties in their respective markets. So how do you get direct access to that? So this is where it became interesting. Now, how do you take you, for example, and meet him up with the guy in that market? It's real simple. A colleague of mine put this website up. It's not complete yet. If you go there, it'll have some information on there. It's not completely done yet. But these are the markets where we've identified inventory direct from a wholesaler. This is essentially a wholesaler's website. Yes, I have wholesalers sending stuff there daily. It doesn't always get up there the day it gets in. I had like 7 properties sent to me yesterday. Only I think 2 of them are even up on the website. But we'll talk about how you can shortcut that too. But the idea was to put all the stuff in one place where people could say, okay, that's where I can go and I can learn about a property in a certain market at a great value and a great price. So it's essentially a wholesale properties website, incomepropertieshq.com. I'm going to talk about just a couple of markets now, and I'm going to do this real briefly just to give you some ideas of why we identify some of the markets we do. I'm only going to do a couple. I don't have time to do a whole bunch of them. I'm just going to do 2. I'm going to do Birmingham and do Memphis. But just to give you some ideas, I mean, this is the reason why, like, for example, we talk about Memphis and people go, Memphis, man, why, or Birmingham, why do you want to be down in Birmingham? I'll tell you something. That was a sleeper town 3 years ago. It's not a sleeper town anymore. Anybody that's a hedge fund buyer, large institutional buyer is in that market. So this is off CNN Money. This is just from January of 2014. They did a thing, the top 10 hottest housing markets in the United States, 2014. Birmingham, Alabama is number 8. They forecast gains through September of 2014 of almost 8% in appreciation. They saw 12% last year, 17% in the previous year. A lot of that has to do with what they've done in the city there. That whole city has been revitalized there. The downtown area there has been revitalized. They've invested over $1 billion downtown. I'll go over that in 1 second. But CNN Money calls it the 8th best overall real estate market, the 3rd fastest growing real estate market. New Wire Investor says it's the 3rd best cash flow market, and I'll show you some examples why it's saying that. 3rd best cash flow market in the United States. Believe it or not, Birmingham is number 3 in the market, and not in the market, in the country for cities in terms of building personal net worth, which means disposable income to spend in the economy. It's got a good, strong economy. As I mentioned, they've spent $1 billion revitalizing the downtown area, the parks, the schools. This is the downtown district there. It's a brand new baseball stadium. This is right downtown Birmingham, the home of the Birmingham Barons, multi-use sports facility there. Memphis, Tennessee, another market that we've known about, frankly, for quite a while, but we had no access to inventory. Without any inventory, you can't go into that market, but we do have access to inventory down there now, as well as property management teams. Again, CNN Money says Memphis is the 10th best hottest housing market for 2014 with a projected forecast gain of 7.3% appreciation through September of 2014. The market down there, we've always, and most people have actually, Memphis has been a place where, going back to the very beginning, Memphis has always been on everybody's radar screen. But again, the trick, the secret sauce is finding that wholesaler. We've been able to identify 2 wholesalers down there, as well as quality property management teams. But again, CoreLogic, again, they say 7.3% appreciation through September as well. So you can see that the market there has strong appreciation. And I'm just going to give you some ideas of some what you. This is what you're going to see when you buy from a wholesaler. And this is sort of the meat and the potatoes. I'm only going to show a few slides, and then I'll take questions now. But just gives you an idea. This is directly from a wholesaler in Kansas City, Missouri. It's a $57,000 property. ePraisal says it's worth $66,000, and it's got an ROI on it of 15.5%. And you can actually get that property a little bit under 57.5. Actually, I think I can get that down to probably 52, 53. But it just gives you an idea. You're looking at 15, 16%. Now, for those of you that have been on my webinars for the last couple of years, and again, I see some familiar faces, you know that we talked about 11, 12, 13 was an awesome ROI. But when you're buying direct, that's going to go up because you've got no middleman in the middle. This to give you an example here. That home I just showed there at 57, Trulia, this is from Trulia, says the average listing price for that home is 71, and the average sales price for homes like that is $111,000. You buy that for 57, probably buy it for less than $57,000 actually. But that gives you an idea. When I talked about buying under market value, that's what I'm talking about. You got to buy something that you know, okay, 57,000, but it's worth. If I were to sell it tomorrow, I'm going to be able to sell it for at least 60, 65, 70. You're going to get your money out of it with profit in a worst case scenario. Give you another idea here. This one here is this was actually already rented. It's got a Section 8 tenor. Just gives you an idea. $43,000. It's ePraisal says it's worth $82,000. Your ROI means your cash flow on this thing is 82. I think that thing's renting for $750 or $800. So ePraisal says 82,000. You got a 16.5% cap rate. Then you go to the Trulia description on that same property. And then it says in the red there, you see in the middle, the average listing price for homes like that is 72. Again, you can buy it at 43. And similar homes sold like that home, sold for 122. You're buying that at 42.9. Now that's what happens when you go direct to a wholesaler. Your ROI goes way up. So your ROI is going to go, if it's 12, it's low. You're going to be at 13, 14, 15, 16. I've even got some I'll show you in a minute. They're up in the 20s. And you're going in, you're buying in undervalue, and you're getting great cash flow in the property in a market that everything says is going to go up 7, 8% in 2014. Yes, it did snow in Birmingham a couple weeks ago. You can see the snow on the roof there. But here again, price $47,000. It's an ePraisal at $67,000. ROI of 15%. Again, directly from a wholesaler. That's a 3-bedroom, 2-bath. That's already rented at $800 a month. Now, people always have asked us, can you buy bulk? Because we do get people that show up in these webinars and say, I'm a larger investor. I want to buy bulk. And you can do that. But, typically when you're buying bulk, you're talking about buying, anywhere from, $500,000 to $5 million is typically what you're looking at when you're buying a bulk package. This is one was a little bit unique. These are 6 homes, single-family residence, all rented rehab, all cash flowing. The investment amount is $96,000 or $16,000 a door. So when you buy them in bulk, it's only $16,000 a door. Now, I will tell you, if you were to buy these individually, you could never do that individually. They said, no, I'm not selling it. If you're going to buy them per door individually, I'm going to charge you $20,000, $22,000, $23,000, $25,000 for those doors. But in a group, and I'll sell these as a group, whether I sell them one at a time or if somebody buys all 6, your ROI is 33% on those. And you can buy those one at a time because I'll sell all 6 of those to somebody. Could be 2 people, could be 3, could be 6. Could be 6 people buying one apiece. But $16,000 a door and a 33% cap rate in Macon, Georgia, in a market that's climbing back as well. So now, we talked about your strategy. Now we're going to talk a little bit about what we've done additionally with our website to help you identify what you want to do. And there's a lot of reasons why we did this. And one was, for years now, I've had people call me up and say, I'm looking for homes in New York. And I'd say, don't have anything in New York. If I find something, I'll let you know. And then sure enough, 3 months go by and somebody will call me up and say, hey, I got some properties in New York. You know anybody? And I'd say, yeah, I did, but I think I threw that guy's number away. So what we did was we said, well, let's be smart about this. Number one, you should have a strategy. You should know what you're looking to buy, where you're looking to buy it at. So what we did on our website, we put up a link there that says your buying criteria. If you click on it, you can then fill it out. It's just going to ask you a couple basic questions. What markets you're looking for, what cap rates you're looking for, what are you specifically looking for, so that we find something we can then contact you. It doesn't cost anything. Somebody asked the other day, what does it cost to join? There's no cost to join. It's just a place where you can go and say, this is my buying criteria. I'd really like to get something with a 15% cap. I got no more than $50,000 to invest. I want to hold it for 2 years. I want to be able to get good appreciation. I want to be able to sell it at a nice. If we know those things, then we can do a better job of helping you. So if you give us your buying criteria, we can better help you. No different than what a hedge fund does. Here's our buying criteria. This is what works for us. When you get something that fits that, give us a shout or send us over what you got. We're going to be doing the same thing now. We have people going to our website. They're filling in their buying criteria, and that'll better help us prepare them for what's out there in the market and what they can expect to see. So essentially what you just saw was how hedge fund guys buy. That's just what you just saw. You have your criteria. You know what you want going into it. You set that criteria, and then you work directly with the people that can help you. You don't go through a bunch of middle people that take their share here and there and everywhere. And again, there's nothing wrong with the specialized REO groups. If you buy through one of them, that's still a great strategy for you. If you have a level of comfort in having somebody partner up with you and kind of walk you through the whole thing, you can certainly do that. But I have more and more, throughout the course of 2013, I heard more and more people saying, can I get a better deal if I buy it through somebody else? And so that's the manner in which a hedge fund guy acquires real estate from. You buy direct from the source, you eliminate that guy in the middle, and now you can do that too. You want to get on our mailing list, or you want to get in contact with us and talk to us about what you're looking for, and we'd be glad to walk you through the different opportunities that exist out there. So that's my presentation today. I want to thank everyone for joining us. I'm going to take questions now, so if you have any questions, I'll be glad to answer them. Again, if you look to the bottom of your screen there to the right, you got a dashboard. There's a little button that says questions. If you just click on that, a little screen will pop up and your questions will come in, and I'll be glad to answer those questions. There's a couple here real quick that I will answer off the top. Do you have financing available? You know what? That is the #1 question that I get asked, and the answer is no. Interestingly, we're going to be having a webinar in about 2 weeks, the week of the 10th of March, that with a group called Meridian. They are in the Memphis, Tennessee market. Meridian has financing available, both traditional and hard money. Most everything that they do is through financing. Yes, you can use your 401k or self-directed IRA. A little more complicated, but you can do that. They will be doing them. Look for that invitations with Meridian. It'll be on the 10th, or no, the week of the 10th. Meridian will be a guest on this webinar, and we'll be talking about some financing that you might be able to acquire. Okay, next question. If I have a house that I want to sell, what do you charge to put that on your website? Nothing. This website, this is just a place where you can, if you've got something that you want to sell, we'll put it up on the website for you. Be glad to do that for you. If there's people out there looking to pick up, that type of real estate you have for sale, we'd be glad to help you find a buyer for it. Okay, can you still purchase from a wholesaler using your 401k or self-directed? Yeah, that's just a typical function of escrow. So, your money just goes to escrow. There's always an escrow officer involved. Your money goes to escrow through your 401k or self-directed IRA. They then do the transaction directly with the wholesaler. So, yeah, it's no different. The process is exactly the same. Okay, how do you make sure the properties are of high quality using different wholesalers? You know what? The people that we've dealt with are people that we know. We know their work. They provided those properties to other groups, so we're aware of the quality of their work. But I would also tell you that before you would close, I would tell anybody to get an inspector out. Inspectors that do these inspections on properties are licensed people. They can't, somebody said to me once, well, how do we know they're going to tell me the truth? They could be friends with the guy that owns the house. Yeah, that's all true. They may be going out having a beer after the inspection. That's all true. But really and truly, these guys are licensed. These guys do good work. They go in there and they do a thorough inspection. It's typically about $300 to do an inspection. I would always say that the seller should pay to have the property inspected and the inspection report provided to you. But yeah, that's the other way too, is just by photographs. These guys take literally virtual photographs of the entire property. So when the inspector goes in there, he's really not going in there to check to make sure the flooring's been done right or the cabinetry was done right. It's really more of the electrical and the plumbing and that sort of stuff that they want to go in there and take a closer look at. But there's a number of different ways too verify somebody's work. But the other thing you want to remember too, these guys are in business to sell repeat business. Every time they sell a house, they're out of business and they have to start over again. And so referrals are critically important, and doing good work is critically important. If they get they provide a couple of bad properties, they're probably not going to get any more business from anybody. Okay, since there's no middleman, who do I go to if I have, or if there's a who do I go to if there's a problem? The property management team, the same people actually you would have before. The property management teams are there to help you, and I've interfaced a lot of these folks now, and they're professional. They do good work. They provide all the accounting to you. They provide everything from accounting on the collected rent to the disbursement of money for taxes and insurance. The net check then goes to you, whether it goes back to your 401k or your IRA, or it goes to your mailbox or to your checking account, wherever it goes, but they send you that net check back. Most all of these property management teams have their statements available online now, so you can get it paperless. You don't have to wait for the thing to come in the mail. You just you can go online and see exactly what's going on with your property. So it's pretty sophisticated, and getting direct access to them is not a big deal. So who do you go to? You go right to the property management team. Okay, last question here. Can you help us resell the house when we want to? Yeah, I mean, absolutely. There's a number of, it's interesting. We talked about, the reasons why hedge fund guys buy, and then one of the things up there says creative exits. Creative exits essentially meant that there's lots of people buying real estate right now. And so if you have a piece of property, let's say you buy it today, and, your strategy is to hold it for 5 years, which is a really good strategy. But what happens in a year from now, you lose your job, or your kid needs money for college, or you have an event that occurs that would cause you to need to liquidate that asset. You can sell it whenever you want to sell it, and there's plenty of outlets to sell it too. The key, again, is to buying it below market value. If you're buying it from a wholesaler, you're going to get a great rate on the price. So, the idea is you never want to lose money when you sell a piece of property, even if you hold it for a month. So you want to make sure you buy it well under market value, so when you do decide to get out, whether it's tomorrow or in 10 years, you've got equity in it, and you can sell it and make a profit on your investment. I think that's the last question in the queue there. Okay, that looks like the last question. I left my name and my phone number up here. If you'd like to give me a call, I could certainly. Somebody asked me the other day. They said, "Well, how do I get a hold of these wholesalers? How do I do that?" That's not. If you just contact us, once we know what you're looking for, if we know what your investment strategy looks like, we would just then present you with a number of different options, and then we would take you directly to the individual that is offering the property. So that's not complex at all. That's what we sort of do, is just a conduit to connect the dots, and that's easy. So just we can take you directly to the guys that are selling the properties. That's the whole idea here. Okay, so with that, I want to thank everyone for being on here today. We're not going to have another one this week. We're going to do 2 more next week. We're going to have, again, I think I talked about Ray Russo will be with us, talking about buying from a financial planner's perspective. And then in 2 weeks, we'll be doing the webinar with Meridian, which, if you're looking for some sort of fund, I didn't give a very long answer on that, but we don't recommend anybody with regards to non-recourse loans. Meridian's obviously a solid group. You'll see it for yourself when you see the webinar. These guys got some real viable options for the Memphis, Tennessee market with regards to buying, turnkey real estate from them. So that'll be in 2 weeks, the week of March the 10th. The date's not firm yet. And again, we will be doing one with about the top 10 tax benefits too, so be on the lookout for that. So again, I want to thank everyone for being on here today, and I hope to talk to you soon. I'll hit my mute button just in case somebody has a last-minute question. So I'll hang out here for a couple of minutes. So if you got a last-minute question, I'll answer it for you. If not, feel free to give us a call, and I just want to thank everyone for being on today.